My name is Jake, welcome to the channel. In today's video, I want to talk about how to invest your side hustle income. Now, I want you to imagine for a second that you worked your 9-to-5 job and then you decided to start a side business, a side hustle, side gig, whatever you want to call it, to generate a little bit of extra income on the side. Now, imagine that that side gig that you created is doing really well. You worked really hard to get it set up, spent a lot of time and energy and resources to get it off the ground. Now, imagine that you were able to bring in an extra $100, $500, $1,000 a week, whatever that number is. The number doesn't really matter. That's pretty cool, right? Now, imagine that after you've gone above and beyond, only to realize that you're only going to be able to keep about 60 or 70% of your side hustle income because taxes are a thing. Now that sounds pretty depressing, and that's actually the reality for most people. But what if I were to tell you that there was a different way and that you could keep 100% of your side hustle income? Now, I know that that sounds kind of like one of those commercials that you would see here on YouTube, like you see like those, 30-second commercials. What if I told you you could do this? But wait, there's more. If you call, like, honestly, hearing myself say it like that sounds a little bit cringy, but I want to show you how I did it, how a normal person created a side hustle, and how I kept 100% of the income that I generated from my side hustle. So the cool thing about this topic is I've actually lived this and done it myself. It's not something that I just researched, but I'm sharing with you my actual experience. So we're going to talk about 4 topics in this video, and I want this to feel more like you and I are sitting down and we're having a one-on-one conversation. And so grab your coffee, grab your Celsius or your drink of choice, and let's dive into it. So the 4 topics that we're going to cover, first, I want to talk about how is income taxed, because this is really, really important that you understand this. Otherwise, it can be a little bit confusing. So I'm going to briefly touch on that. That's the boring part. So we're going to get that out of the way. But once you have that foundation, then I want to move into and I want to talk about how you can pay 0 taxes with your side hustle income. Then I want to talk about how you can invest your side hustle income, what kind of options you have with this example. And then lastly, I want to show you how I did it. I want to walk you through step by step how I paid 0 taxes on my side hustle income. So this is going to be a little bit of a different video than I normally make here on my channel, and it's very different than the majority of dividend investing channels on YouTube. Most dividend channels here on YouTube just talk about buying every single dividend stock on sale and you got to collect them all. It always makes me think of this. Oh my gosh, 'tis the season. All right, cool. So first off, I want to take a look at the different, how is your income taxed? Especially if you're here in the United States, you have what's called a 1040 form. This is where you fill out your taxes, whether you do it yourself or you give it to an accountant, somebody that does it for you. But essentially, it's important that you understand these different tax forms and how the government views different forms of income. Okay, so on your 1040 form, this is where you're going to fill out, your W-2 income. You're going to fill out your dividend income, for example, if you have your qualified dividends. This is where kind of the summary of all of your taxable events for the year will be at. The next thing that you probably have seen is if you invest in stocks, you've probably seen a Schedule D form. This is your capital gains, and losses form. This can be either short or long-term gains, and this can vary depending on how long you hold the stock, if you sell it at a gain or a loss. And this is a little bit different than if you were to, have side hustle income. Your side hustle income is going to be different than capital gains income and qualified dividends income. Another one that's pretty common, if you own rental properties, for example, if you invest into real estate, you're going to have what's called a Schedule E. And on your Schedule E, you're going to, list all of your profits, your losses, your expenses. And real estate by the government is actually, seen as a business. But your side hustle income, say, for example, you're an Uber driver or you start a lawn mowing business or something like that, it's not going to go on this form. It's going to go on a different form. If you have side hustle income, it's actually going to go on a Schedule C form. Now, the cool thing about the tax laws here in the United States is you can form different entities. You can have a sole proprietorship, you can have LLC, S Corp, all of those different things. For this purpose, I'm going to assume that the overwhelming majority of you, if you have a side business or a side hustle, you're a sole proprietor. So you're a solo individual business owner. And if you have income, maybe for example, a 1099 income that you got from, somewhere where you generated income as a contractor, as an example, you're going to enter in all of that income on your Schedule C. And similar to your Schedule E with your real estate, you're going to have your gross revenue minus your expenses. And the exact same thing is going to happen with your side hustle income. So say, for example, you have your own lawn mowing business, you're going to have expenses, for the materials to get the gasoline to get your lawnmowers to actually work, the weed whackers, all those materials, all those things are expenses to generate that revenue, and you can offset that against your income. Okay, so your side hustle income minus your expenses. And one thing that you probably didn't know, or at least it's not talked about a lot, is you can actually, as a solo entrepreneur, sole proprietor, you can actually set up a retirement account to offset the income from your business, from your side hustle. And the way that looks like is you're going to have what's called on your, if you file your taxes on your Schedule 1, additional income and adjustments to income. If you scroll down here, you'll notice on line 16, you'll have self-employed SEP, simple, and qualified plans. These are retirement accounts, okay? And so this is how you can offset your income while keeping it. Like while keeping the money still belongs to you. You're not paying it away in taxes. You're actually retaining that income, but you're deferring it in a tax advantaged account. That is how you keep 100% of your income minus expenses. So now that we understand how income is taxed and viewed differently by the government, we can use that to our advantage. So what I want to talk about next is how to pay zero taxes on your side hustle income. Now, what it comes to is if you have revenue, if you have income, you have to deduct your expenses. But if you still have a surplus or a net gain, after that, what you can do is you can invest the remaining balance into a tax advantaged account. Now, there's a few different options that you could look at. Now, let's assume that you're a W-2 employee. You have your 9-to-5 job, but you have a side business that you do on nights or weekends or whatever, just on the side, right? So I'm assuming that you're still employed. So what are the options that you have available to you? Well, if you're employed with a W-2 income, you're still probably going to have access to a 401k or a TSP or some other plan. You're going to have access to a Roth IRA because you're making money. But what you'll also have available to you is what's called a small business retirement account or an individual 401k plan. Now, this can be as complicated or as simple as you want it to be. Now, I went through the weeds of trying to understand what was the right approach for me. Now, if you have a small side gig, and you're making a small amount of money, whatever that amount may be, it's all relative, doesn't matter. But if you're making money and you need to pay taxes on that, so for example, if you're making over $600 in a calendar year, you need to declare that, right, officially. You're gonna have different options. And so when I went down this rabbit hole of thinking, well, which plan is the right for me? All these different accounts. And what I finally landed on were two options. I was looking at the SEP IRA and the solo or the individual 401k. Now, you probably, if you're hearing this for the first time, you're probably thinking I'm speaking another language, and that's okay. When I first was learning this, I was a little bit confused. But essentially, I was considering either a SEP IRA for my individual business, for the side hustle, or an individual 401k. And I ultimately went with the individual 401k, which is also known as a solo 401k. So I don't want to confuse you because this confused me, all right? A solo 401k and an individual 401k, they are the same thing. A SEP IRA is different. The benefits of a solo 401k, solo or an individual 401k versus a SEP IRA is you can contribute more to your solo 401k. It's just a little bit more annoying to get it set up, setting up the individual or the solo 401k. And remember, this is not from your employer. This is separate. okay? You can have both. You can have an employer 401k and you can have a solo entrepreneur, a solo 401k. Isn't that amazing, right? Isn't that cool? So if you're a one-man show or one-woman show, whatever you are, and maybe you have a spouse that works with you, I would say in almost every case, a solo 401k is the way to go. And once again, to repeat myself, because I'm going to use them interchangeably. A solo 401k and an individual 401k, they are the exact same thing. So let's take a second and let's take a look at an individual 401k, also known as a solo 401k. The reason why this is important, because if you Google it, not every, for example, the IRS has it labeled different than some of these brokerages. So it can be a little bit confusing. Okay. So an individual 401k, it's like an I-401k. It's a retirement plan that you can maximize your savings if you're self-employed or if you have a side hustle. So how much can you contribute to a solo 401k? Now, this is a little bit different than a SEP IRA. With a SEP IRA, you can only contribute as the employee, whereas with a solo 401k, you can contribute as an employee as well as the employer. Okay, pretty cool. So as the employer, what you can do is you can contribute 25% of your compensation, but it's not to exceed more than $66,000 here in 2023 and $69,000 in the next calendar year in 2024. But the cool thing is 25% of your compensation, well, what is your compensation? You set your compensation. So there's a lot of flexibility that comes with that, okay? With the SEP IRA, this is all you get. Now, with the solo 401k, you get this over here to the right. With a solo 401k, you as the employee can also contribute up to the max, which is for 2023, $22,500 in 2023. And the cool thing about this as well is you can do pre-tax and Roth. This is the big reason why I went with the solo 401k as well, is because you have both those options. You can do pre-tax or after-tax with the solo 401k. Now, this is really cool because the amount that you can contribute is significantly higher than with a traditional regular 401k from your employer if you're a W-2 employee. So you have a lot more potential to invest more and to defer all of this income in a tax advantage account. But here's the one thing that I do want to make sure that you're aware of is these plans, because they're not sponsored by your employer, they do cost money. So that cost is carried by you as the, in this case, employer, right? Because it's your business. And so there's no fee to set up an account, for example, with Vanguard. However, if you don't have other accounts with them, like you don't have a Roth IRA or an individual IRA with them, there is a $20 a year fee to have this plan. Thankfully, I had my Roth IRA with Vanguard already, so I didn't have to pay any fees. So that is something to be aware of, that you're going to have fees with these type of accounts. And I compared the fees with Vanguard versus other brokerages. And I just preferred Vanguard for multiple reasons. One, the fees were lower. The investment choices were better, which we'll get to here in a second. In my opinion, this is all subjective, right? The fees are not subjective. Those are objective, like those are real. And then I guess, lastly, having all of my investments, because all of my retirement accounts are with Vanguard. So it was all under one roof. I opened up the Vanguard app, though it's not as flashy as other apps. It's all in one place. So that's why I went with the Vanguard Solo 401k. But I will say that, as a critique, as a review, their user interface, it's gotten better these last couple of years, but you have to go into a completely different user interface online on the desktop to actually contribute. It's not as mobile friendly. So just bear that in mind. It's not going to be as flashy and the UI is not as slick as, maybe other brokerages. But, that's all subjective, but that was one observation, one critique from my end. Now, for all of you skeptics out there thinking, what the heck is Jake talking about? Is this even real? Don't take my word for it. This is the official website of the US government, the IRS, irs.gov. You can take a look, Google one per participant 401k plans. Once again, remember what I was talking about, solo and individual, like some of them, are labeled differently, so it can be confusing. You can confirm everything that I'm saying in this video through the official, government website, irs.gov, and you'll see here all the examples of, the contribution limits, how much you can contribute, how that all works. If you want to verify what I'm saying, you don't want to take my word for it, you can confirm on the irs.gov website. So once you have your brokerage selected, for me, I selected Vanguard. There's no incentive for me to sway you in one way or another to use Vanguard or not, or use another one. I don't care which one you use. I personally use Vanguard. I liked it. It was pretty seamless for the most part. But these are the options that you're going to have. You're going to have access to all of Vanguard's index funds and mutual funds. Me personally, I really like sticking with their index funds. I think if I remember correctly, I only had access to a handful of index funds. I don't think it was possible. Somebody correct me if they know in the comments, but I don't believe it was possible to invest into ETFs directly. You had to go with the index version. So what I ultimately did was invest into, the total US stock market, the equivalent of VTI, in my solo 401k in Vanguard. But what you'll want to be aware of is, depending on the brokerage, you're going to have limited access to what you can and cannot purchase if you want to do it without a fee. So if you invest into Vanguard funds, you'll pay 0 fees. Now, I believe if you want to invest into others, I believe that there is a fee. So that is something to be aware of. That's something that you want to make sure that you have on your radar is with these type of accounts, because they're not employer sponsored, where your employer, your W-2, 9-to-5 job, your employer is subsidizing a lot of these retirement plans. When you're doing it yourself, you're the one fronting the bill in that case. So just be aware of those hidden fees that come with these type of accounts. I haven't looked at other brokerages. I don't know necessarily what all of their hidden fees are. Just be very, very careful. And so what you can do is you'll have access to the different funds here in Vanguard. And I want to say this one more time before I forget. Just remember that you're going to have the option to contribute as the employer as well as the employee. So it's very, very important that you understand that. And these employee contributions, the total yearly max, they count for all 401k plans, whether through your employer, your regular job, or through your solo 401k. So these maxes, they apply for holistically across all of your accounts. And so this is something that I just can't stress it enough, that you want to make sure that when you're contributing, that you're understanding the difference between an employee contribution and the employer contribution, because they are different. And if you do set it up with Vanguard, you will have the option to do one or the other, or a combination of both. So just be very, very clear on what that is. So lastly, I want to share a real example of how I paid 0 taxes on my side hustle income. Now, if you don't know, my side hustle is YouTube. What I'm doing right now, this is my side hustle. When you watch my videos and you see ads here on YouTube, I get paid from YouTube for you watching those ads, as well as when you click on the links in the description below. Let's say, for example, you sign up to Seeking Alpha with my link and you get a $50 coupon and you get a better price with my link. Seeking Alpha will pay me a commission for referring you to their service, as well as with M1 Finance. For example, I have an M1 link in my description. If you sign up to M1 with my link, I get a commission as well. And I get a 1099 from M1 that I have to pay taxes on. So when I get a commission from these services, I actually have to pay taxes. Since we're talking about affiliates here, and I can seamlessly drop this little affiliate into the video here where it's seamless, and I also work with other brands like card ratings. So for example, if you use if you click on the link here where I talk about high yield savings accounts or credit cards, and you click on this and you actually end up signing up for one of these credit cards, then I will get a commission and I will be issued a 1099 from card ratings, and I will have to pay taxes on that commission. So there's a lot of value in this, but just be responsible. I don't pay a single cent in interest. I pay the credit card off every single month. Just be responsible. So now let's get back to my example of how I paid 0 taxes on my side hustle income. So I was working my 9-to-5, working as a software sales leader, leading sales development teams, and I was making a good salary. And on the side, I was creating these YouTube videos here on the weekend, and I would generate ad revenue and, the affiliate income. So I had that revenue, and what I was able to do is, I set up a sole proprietorship, as a single business owner. So I didn't have any LLC or anything like that. I would always put money into a high yield savings account throughout the year for the purpose of investing in it into my solo 401k. but I didn't know how much I was going to make. That's the challenging thing about, YouTube is you never know how much you're going to make. Maybe one month I'll make this, the next month I'll make that. It's really, really hard to say. That's just kind of how side hustle income is. Or being self-employed. And once I completed my taxes in March or early April for the previous calendar year, I would then figure out, after all the expenses and all the deductions that you would have, I would figure out to the penny how much net income my business generated. Now, this is really important because here in the US, you can contribute to a tax advantage account for the previous year all the way up until April or later if you do an extension. So for example, here for 2023, I can contribute to the calendar year of 2023 all the way up until April when I file my taxes next year. So I knew exactly how much I would have in net gains, so I contribute exactly that amount in order to pay zero taxes on my side hustle income for that year. So in this case, because I was in a higher tax bracket, because I was still working full time, right? I contributed to a traditional solo 401k, meaning I was getting the tax benefits up front. So it was thereby lowering my taxable income. Okay, do you follow me? And then once I reached FIRE or barista FIRE here in 2023, I wasn't making as much money. I didn't work my 9-to-5 job. I was in a lower tax bracket. So what I did was this year, I converted the traditional solo 401k and I converted it into my Roth IRA. I'm going to be paying the taxes here this year, and that's okay because I'm in a lower tax bracket. So this way, I was able to pay zero taxes for the year that I generated the income, and I was able to take advantage of lower taxes by, because I was in a lower tax bracket, by converting it in the year where we made less money, and I had full control over that. So that's how I paid zero taxes on my side hustle income in the year that I generated the income. Now, I could have, kept those accounts the way that they were and had them for the next 20 or 30 years. But I made the decision that once I was in a lower tax bracket, I wanted to pay the taxes now and convert them into a Roth IRA. Because sooner or later, once you retire, you're going to have to pay taxes. There's only two things that I know in life. It's death and taxes. And that's the reality of how things work. So I hope that this video was helpful. I know that I talked about a lot of different stuff. I know that this is not maybe the easiest topic to grasp, especially if you're new to investing. And I really try to cater my content towards new and beginner investors. I really am a huge advocate of keeping things simple. If you're new to the channel and you want to learn more about the type of content that I create, I talk a lot about retiring early with my dividend portfolio. And how I do that is by talking about this simple path to wealth with dividend investing. This is something that was inspired by J.L. Collins, something that I created, and I created an entire video on that. And if you're interested in that, you can take a look at that video next. Thank you so much for watching, and I'll see everyone in next week's video.
Please subscribe. Please subscribe.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.